Hi, I'm Jen, and welcome back to CryptoVantage. Today we're going to be discussing the relationship between traditional banks and the crypto industry. Is it simply a matter of time before banks embrace crypto and become portals to the ecosystem? Or are banks risking becoming obsolete by ignoring the growing momentum that crypto is generating? If you find today's video useful, give us a thumbs up and hit that subscribe button. Head on over to cryptovantage.com for even more news, resources, and information. Since the creation of Bitcoin in 2008 by Satoshi Nakamoto, the relationship between banks and crypto has been a bit tumultuous. Banks initially bashed cryptocurrencies and questioned their legitimacy. Were banks threatened by crypto, or did they think the entire industry was just a fad? Probably a little bit of both. Bank of America slammed Bitcoin for its intrinsic lack of value and its environmental impact, while CEO of JP Morgan, Jamie Dimon, even threatened to fire his own employees who traded Bitcoin, saying it's against the bank's rules and it's stupid. Fast forward to today, where the US bank is giving all wealth management clients access to crypto funds. While many banks were once outspoken about their lack of faith in cryptocurrencies, the rising momentum in the industry is forcing them to face the dilemma head on. If banks don't pay attention to the innovation happening in crypto, they risk becoming obsolete as the industry continues to become more mainstream. Real financial inclusion means people and businesses everywhere can access meaningful, convenient, and affordable products and services, something that's not always available through traditional banking. The increasing uptake of crypto means that people who couldn't previously access services like mortgages and loans have an option now with decentralized finance. When it comes to real-world use cases, in Venezuela, citizens are turning to Bitcoin to beat inflation, and in Nigeria, where there have been protests against police brutality, protesters have raised donations in Bitcoin after traditional banks shut them out. In these two examples, we see how Bitcoin is truly free, made for the people. There's no third party like a government or a bank that these people have to answer to access funds. These cases illustrate how if banks don't adapt to the needs of the modern consumer, they could become irrelevant. Banks are facing a dilemma. Should they dabble in crypto or stick to fiat? Embracing crypto means banks will influence its uptake in mainstream finance by innovating services that address consumers' emerging needs. Sticking to fiat means that as the crypto space continues to evolve, banks will be watching from the sidelines. We've seen traditional financial institutions begin to adopt crypto. America's oldest bank, BNY Mellon, announced this year that they would start holding, issuing, and transferring cryptocurrencies on behalf of its asset management clients. Another American bank, Morgan Stanley, is offering their wealthiest clients access to crypto funds. It's not only banks that are sitting up and paying attention. Payment services like PayPal have also began adopting crypto in a major way. Last year, the company rolled out support for cryptocurrencies in the US in a partnership with Paxos. PayPal services over 377 million users around the world, and this was a huge win for crypto as it served as an on-ramp for people who are just getting started with cryptocurrencies. One trend that can't be ignored is the relationship between central banks and crypto via central bank digital currencies, also known as CBDCs. There's a growing number of central banks around the world piloting CBDCs. Now, while these CBDCs are a state-issued digital currency, they don't offer the same features as some cryptocurrencies on the market. Some are concerned over the ease at which governments will be able to track transactions from everyday law-abiding citizens and program money with the launch of CBDCs. When it comes to programming, this means that governments would be able to program how money is spent, set expiry dates on money, and have complete visibility into all transactions. That's pretty scary. CBDCs seem to have a lot of benefit for the government while infringing on privacy and the freedoms for citizens. The European Central Bank said the drive towards CBDCs is more about digitalization, efficiency, and undermining unregulated payment solutions than anything else. What they fail to recognize, though, is that these unregulated payment solutions offer real solutions for real people that provide real financial freedom. CBDCs won't offer a solution to many of the issues that crypto solves: protection against inflation, self-custody, and privacy. And there you have it, a brief history on the relationship between traditional banks and crypto. Let me know in the comments below if you think that banks are on the path to adopting crypto or if they're going to hold off a little while longer. If you found today's video useful, give us a thumbs up, hit subscribe, and head on over to CryptoVantage.com for even more news, resources, and information.